Yes, anybody saying something? Yes, today our topic is the corporate tax losses relief. But before that, some people are still asking the question on the previous topic. See, the previous topic, only the one point I wish to share with you. That was during the one of the consulting point we come across and people ask this question, and so I said, okay, maybe I'll share with you guys also. But apart from that, the complete topic, yes, you go online on YouTube channel. These videos are available. These topics are available. The complete, then you will understand what is the debt subsidy and what is the equity interest and what is the debt interest. Here, this is not our topic today that we already covered. So maybe you already skipped the previous topic. So maybe that's why you are asking the same question. But I do appreciate you can go through the complete topic. You will understand. Anyhow, today our topic is the tax loss relief. So what is the tax loss relief? What is the tax loss relief? The tax loss relief, as per the UAE Corporate Tax Article 37, 38, and 39. These three articles are discussing the tax loss relief. So now, before that, we'll make our understanding clear. Then we're going to start our today. Today is 17 and April 4, 2025. So today topic is the tax loss relief. There is three article is under covering this topic, and we will understand this complete what is the loss relief and how we are going to treat that. So Article 37. So what are the Article 37? Tax losses can be carried forward to subsequent tax period by the taxable person. This is one of the point that normally we are understand. Okay, any company or the taxable person mean any company. The taxable as per the definition of the corporate tax. So we are going to use the same. If we use any company, so maybe their understanding at this certain point may be not appropriate. Here the taxable person under, now we will see, okay, under taxable person, which person are coming? Resident, natural and natural and juridical person. We already have the understanding of the taxable person. In the previous topic, we discussed the taxable person. So here, resident, natural person and juridical person, both are falling under, they can take the advantage of the tax loss relief. Non-resident person, natural person and juridical person, they also can take the advantage of the loss relief. Then the tax group, okay. What is the tax group are also taxable person. This will be also applied to tax group. So the tax group understanding, we will discuss what is the taxable group. Here, the next point, here I'm just summarizing the topic main headline that we're going to cover today. Qualifying free zone person. The qualifying income or the loss, no relief, no qualifying income relief available. So here we are saying if the company is already qualifying free zone person and they are subject to the zero rated corporate tax, okay, because they have the qualifying income, and we know the qualifying free zone, the qualifying income is subject to zero rated. Okay. So then if not paying any tax, so they accordingly, they will not take the advantage of the corporate tax. No relief. But the non-qualifying income, because there is certain criteria we will understand under the free zone, the certain activity, they put the de minimis limit, okay. Still, if you have the non-qualifying income and you are meeting the de minimis requirement, so that still you are keeping subject to 0%. So here we are saying if the qualifying income, you have the losses from that activity, on that you have the loss relief is available, because that activity is subject to corporate tax and you are paying the tax. So accordingly, the losses also can be, you can avail the loss relief. Now the next point is here under the interest expenditure, we understand the interest, there is a cap for the 10-year we can carry forward. Okay, interest expense, whatever the leftover interest we are carrying forward for the future tax year for the 10 tax period. So, but here is no limit. For loss relief, no limit. Now, the second point is the Article 38. What is the Article 38? Before that, I'm sharing this now. The next, I will explain that also. Article 38, the tax loss relief with 75% juridical resident person. Okay. So what we going to understand the qualifying group relief? What is the qualifying group relief? We will understand. Here, the qualifying free zone person, the qualifying free zone person, even non-qualifying income, no relief, no for the tax group members. Here, the tax group losses are one of the additional, one of the comprehensive and the critical point for our understanding. So that I'm going to discuss in the next slide in detail. Then the third article, that is the 39. So what is the 39? Basically some restriction on Article 37. The standalone, there is not a new thing, but this is some restriction on the Article 37. What are the restriction? We will dive into that and we'll see what is the basic understanding. There is no change in the ownership in the business. So then you can keep using the Article 37, or there is no change in the business. Again, you are also keep using the tax loss relief. So now, before starting the today topic, so I'm just gonna give you some understanding. What is the understanding? So let's understand the point. Here I use the word Article 37. Then I use the Article 38. So basically, let's understand that, because 39, you will understand what are the restrictions. This is the dealing on the tax group. Hope you guys understand what is the tax group. Okay. And this is the dealing only the taxable person. Single taxable person. Article 37 is dealing only the taxable person standalone, one company, one juridical company. Let's assume that one LLC company. So he's dealing the Article 37. But the Article 38, what is the difference? This is applicable on the tax group. Now the basic difference, you guys understand, the Article 30 apply only the taxable person who have their own losses. He can carry forward and he can adjust in for the future year. So this is the Article 37. The Article 38, the tax group. The tax group means the qualifying group. If we understand the qualifying. Qualifying tax group, the complete word will be, because tax group itself is another criteria. So maybe that is the not the appropriate. Qualifying tax group. What is the qualifying tax group? Where we understand is 75% of the equity interest. If the multiple, if the one owner have multiple company and he have the 75% the shareholding equity interest, like the company A, like company B, company C, company D. So what is that? If we have directly or indirectly 75% shareholding in each company, so there is a automatic one qualifying tax group relief will be available. You might say the tax qualifying group relief. Okay. Even if you exclude the qualifying group relief, qualifying tax losses group relief, I'm just adding word by word because you will understand why I'm adding word by word. Qualifying tax group relief. Why? Because tax group is a different and qualifying tax group is a different. The tax group is, what is the tax group definition? What is the tax group definition? If your equity interest is 95% or more. Equity interest is a 95% or more, and this is by application. It will not be by default. Hope you guys understand what difference so far, because here the very thin line, the understanding may mix here Article 38 with the tax group also. But the tax group is a different, Article 38 is a different. So Article 38 is qualifying tax loss group. If I refine now, can I say the qualifying group relief? Qualifying group relief. I use these words to reach to the qualifying group relief, the word and the understanding, because I know the people will mix together. So that's why I'm using all these names, and then I summarize on the qualifying group relief. And now the qualifying group relief, what is the definition? What is the article understanding? 75% shareholding. Any parent company, he have the shareholding in different companies, 75%. So they become is the qualifying. They are eligible for the qualifying group relief. This is the optional, not mandatory. This is the optional, not mandatory. Okay, this is the also optional, not mandatory. Okay. Now the another point that you have to understand, if one company is a 95%, one company A is, let's say, the 95%. One company A is a 95% shareholding. Let's say here the one parent company, I'm talking about here the P company, means the parent company. He have the ownership in A is 95%. Here also, let's say he have 95%. So now these two companies can be part of the tax group, but it's optional. You have to give the application if you want to make the tax group, and tax group before the relevant tax, before end of the relevant tax period, you have to submit the application by mutual understanding, mutual consent, like all the entity will be agreed to make the tax group, and they will submit the application to the FTA. And if the application is approved, they can make the tax group. If this A and B coming here, if coming under the tax group, okay, coming under tax group, then it cannot be here. It cannot be here. It cannot be here, because they are already part of the tax group. So now the tax group, I will give the name Z. Let's say when the group is Z. What is that? They make the group under P. Okay. So now, being a group, what is the group? Here I'll just add the word P. The parent company, then A and B from here. See, now A is here, is make the group. A is here, P is from there, and then P also is here. What they are doing, they are making the tax group. If they made the tax group, this is the optional, non-mandatory. They can make and they cannot make. Every year they can dissolve the group and then make the group. Okay. So here, understand that if the company is falling under the tax group, then it cannot be part of the qualifying group relief. But now this group, as a tax group, the name I use, the Z, is a tax group. Okay. So this tax group, yes, now it can be part of the qualifying group relief. What is the qualifying group relief now? What will be our qualifying group relief now? So this will be our qualifying group relief now. This will be our qualifying group relief now. C and D, because P have made the tax group over here, right? So now the P earlier was here, now P is here, right? So now we are making the group as here because the P made the tax group with these two companies. Now I given the name of that. So now, yes, this tax group can make the qualifying group because this tax group standalone will be one taxable person now. These three companies will be one taxable person now. One taxable person now. So that taxable person can make the qualifying group with other company where the shareholding is 75%. Guys, do you understand the difference of the tax group and the qualifying group relief? Under which scenario we can make the qualifying group relief? Tax group by application. This is the no application. Here is a no application, automatic. No application. No election. In return, there will be no election that you're gonna opt for that. But now the question, mostly even our clients are also asking, and where we are giving the training, they are also asking, okay, then how the FTA will come to know you are the part of this group? Because there is no application, by default we are saying automatic, we are saying you will be eligible for the qualifying group relief. You are eligible for the qualifying group relief. So how FTA will know? Somebody want to answer on that? How FTA will be know? Federal Tax Authority, how they will know you are the part of this shareholding and you are eligible for the qualifying group relief? Here, because while registering, if somebody want, yes, when you are register your entity, so what they are saying, your entity part of another group, are they part of another shareholding, part of another ownership? Since that they were asking, share all the detail while registration. On the portal, you already put all the detail for the registration. Yes, the authority already knows you are part of the XYZ. If you did not have the detail in the portal, then you have to do the needful and update your registration data. Wherever your ownership interest or the parties equity interest you have, please update your portal and register all of them. Through that registration, they have the detail of this. So this is the automatic. Yes, you have to, here one entity will saying, okay, I give this much loss to the another entity. Another entity will be saying, okay, I must receive this much, the loss from the another entity. It will be recording in the return, but here the understanding, what is the qualifying tax group relief, right? So now we are saying what are we are doing under the Article 38, where it will be applicable. We are saying it will be applicable on group where the multiple companies are transferring the losses between each other, right? Article 37, we understand this will be applicable on his single taxable person and it will be carry forward. So now we're going to dive into our topic and understand how we're going to start that. So up to here, I just for understanding purpose, I draw these things. So this is the same point that we already discussed and we already covered. Here now we're going to understand the in return how it will be shown. In return how it will be shown. Let's see in return what are the points that we have to put in the corporate tax return. This is the information I taken from the corporate tax return itself. As previously also we used to understand the same, and now I'm gonna tax loss relief. Here, how we can add these details. We should have the figures, but how the figures are coming? How the figures are coming? Tax loss brought forward. Like in the year where the tax loss are occurred, so then we have to report over there. In the relevant tax period, if we are reporting, then it will be brought forward. The tax losses incurred during the tax period. What he's saying, the opening balance is also mentioned, we have to mention, and the current year also we have to mention, right? The tax losses received due to the application of business restructuring. We will understand the BRR, okay? This is another topic we will understand. The tax losses which have been limited due to change in ownership. Today we are going to cover that. Okay, the tax losses utilized in the current tax period, like the previous year losses we have. So how much is utilized in the current tax period and how much is the leftover? Other adjustment which increase the tax losses, other adjustment which decrease the tax losses. See, the authority is asking each and every aspect how the figure is going to establish that. And backend working must be there, but in the portal itself, they are saying give us all the adjustment data. This is the adjustment. Description, nature of the adjustment. Tax loss carry forward for tax losses carry forward available for the transfer. Again, we have current year, how much we utilize and how much is left over. So this is the return from extract taken from the corporate tax return for the understanding purpose. And but how the important part, if we know how to calculate the figure, if we know how to make the adjustment, then we can easily fulfill the return. So our main focus on this taxation e-learning program, the training that we are, I'm trying to share with you guys and trying to explain you guys to learn the main topic and the main points. This is another same point, but this is not relevant so currently. Let's start the main topic today that we have the corporate tax loss relief under Article 37, 38, 39. Before coming to the topic, now you already understand 37 and 38. But now practically we will start this. In case more expenses, how the loss is appearing? How the loss is appearing? If we have the income is less, expenses are more, expenses are exceeding than income, then as a result, we will have the loss. So there will be no income. As a result, if we are having the loss, no income, so zero income, zero corporate tax. We are not paying the corporate tax, but we are saying, okay, we have the loss. If the authority is requiring from us, if you are earning the income, you pay the tax. So they may compensate us on losses part also. The normally may as a common man, as a common layman, we are understand may ask, okay, on income we are giving you the tax, on the loss you will give us the refund. Give us the refund to us. Because we paid, when we having the profit, we give you the tax, now we are losses, so please give us some refund on that, right? So on losses, there will be no refund, but you can adjust against the future taxable income. We can adjust against the future taxable income. In case more income, will pay corporate tax on taxable income. Calculate the taxable income. How we will calculate the taxable income? Normally in the accounting, we will have the accounting profit. From the accounting profit before tax, we have to do the Article 20 and applicable adjustment to reach to the taxable income. So this is called, we are saying, the calculate taxable income. Tax adjustment, adjusted losses as per Article 20. What does it mean? If we have the accounting loss, one scenario where we have the accounting profit, we are doing the adjustment as per Article 20, that in the previous session, we already have the detailed understanding what are the adjustments we're going to make in the accounting profit before tax to reach to the taxable income. But here we are saying if we are already in loss. Under the accounting profit, instead of the profit, we have the loss. Okay. So while making the adjustment, maybe we are in the profit or maybe we having the more losses. Why? Because certain expenses as per the, I'll just take the example, certain expenses means the entertainment expenses. In accounting, we are in loss because we have the business entertainment for the customers and the clients. Okay. We deducted the 100% the entertainment expense. So we are in loss. Now under the Article 20, he's saying only 50% allowed. So now if you add back 50%, you might be becoming the profit, right? So this is the understanding purpose. But there is another scenario, accounting loss is there as per after adjustment, maybe your loss is more. Okay. So now our topic is a loss. So we are establishing at the end after adjustment, you have the loss. So now this loss, what do we do? But here is the important point, in case accounting loss, but after adjustment, what is the adjustment as per Article 20? Well, how many adjustment? 8 or 12? Guys, please participate in that. How many adjustment we are having under the Article 20? 8 or 12? We have detailed understanding on that. So here, let's say we have the loss. Losses are good in tax. Losses are good in tax or bad in tax. The accounting profit or the loss, the owner are preferring, okay, it's good, I'm earning the profit. But now in case of the losses, in investor point of view, yes, he is not like the losses. But when coming to the taxation, the losses are good for him or not? Because he can get the relief. Okay. But the losses will not give us the city refund. There will be no refund. Earlier I mentioned, as a common layman, we might expect on income, on the profit, we are paying the tax. Now on the losses, authority may give us the refund. Okay. The refund mean you will not get the amount from the authority, refund to your bank account, refund to your company, but you may adjust for the future taxable income. All right. So now loss relief. What is the loss relief? Is the income reducer. You guys are familiar with the income reducer and the tax reducer? Do you have the understanding what are the income reducer and the what are the tax reducer? If any adjustment we are making against the income, taxable income, if any okay, there is a two part, the income, I'll just sharing for the tax liability. Okay, then second is a taxable income. Now, do you understand what is the tax liability and what is the taxable income? Guys, do you understand both of them, both of these? Tax liability that we will pay to the authority and taxable income, we calculate it, then but we will apply the tax rate on that, then it will be converted to tax liability. Then it will be converted to tax liability. This is the early second last stage. Okay. If we have, then we will apply the tax rate. What is the tax rate? There's a two tax slabs. One is the 0% up to 375,000, and above 9%. Whatever the above taxable income is left, so 9%. So whatever the amount is coming after applying, that is the tax liability. right? So now if the adjustment we will make over here, we will deduct from here, okay? If we deduct any amount over here, this is called the income reducer. This is called the income reducer. So the previous year losses will be adjusted against the taxable income over here before tax liability calculation, before this tax rate applying. At this stage, whatever the amount or the adjustment we made to reduce the taxable income, this is called the income reducer. And whatever the tax liability, reduce our tax liability. What is that tax liability? The foreign tax credit relief. If you paid the tax in overseas country, then you will net off from the tax liability or the withholding tax if you paid in the UAE. Okay, that will be this here the foreign tax credit relief. So this normally these two are withholding tax, foreign tax credit. These are the tax reducer. These are the tax reducer, but the income is to reduce the taxable income. Hope guys you understand the point now. Okay, now we have the tax loss. So we said it will be adjust against the taxable income. It will be income reducer. Because income reducer, the amount where we are applying the tax, he will reduce that amount. So now let's understand this point also. Mostly, if the people are from the background of the ACCA and the background from the ICAW or whoever have the international taxation experience, okay, so they might understand the other jurisdiction also, how the other jurisdiction or the tax authorities, they are treating the tax losses. So here we're gonna, for understanding purpose, we will see the other countries, how they are dealing the tax losses. Then we will come to the UAE. Why? Because based on our education or based on our earlier learning, we have different understanding. So we have to just refresh and then come back to our UAE, how other authorities are dealing. Because many questions during the the training and the question that the client asking, this is how happening in the UK. The UK is treating in this way, but how the UAE treating in this way? Because they're saying, okay, if UK is offering something, UAE will also offer the same. No, both are different jurisdiction. So this is the reason I'm just covering the other countries for understanding purpose. I'm just mostly taking the from the UK point of view, because under ACCA, if somebody took the P6 the advanced taxation, so they might understand, and even the ICAW, the advanced taxation, you might understand that part also. This is mostly the worldwide international taxation. They are having this much similar way they treat the tax losses. Not the 100%, but more likely they are offering the same benefits to the taxable person. Carry back losses to previous tax year. Okay, the one option under UK or other jurisdiction. If the current year, if you have the taxable income, but the last year, if you have the tax losses, you can adjust the previous year. The previous year means, let's say we are in 2024, right? If you have the taxable income, TI is a taxable income, but let's say you are having in 2023, if you have the loss, taxable loss, let's say taxable loss. So this loss you may carry back for the previous 3 years. Under other jurisdiction, they're saying you may adjust here. You may adjust 2022, 2021, but against the tax period. In UAE, our tax is starting from the 1st June 2023 onward as per the first accounting period. So accordingly, we'll see how much the carry back can be done. But although the UAE do not allow any carry back, there is no carry back in the UAE. But the other jurisdiction, they're saying you can carry back 24 loss, you can adjust against this, and 20 against 22 and 21. This is the carry back. The second this 24 loss you can carry forward against the 2025 also. This is the 2025 you can carry forward to future year. Yes, this is available in UAE. Then the group relief. The group relief is available here. We also have the group relief. Now here in UAE, carry forward losses to future year. The same taxable person. You know, this same taxable person. What this mean? The same taxable person. We already understand this. I appreciate if you guys answer on that. I appreciate if you guys answer on that. Which article? Thanks, Mr. Adnan. Article 37. Article 37 is dealing. Here the Article 37 is dealing. The taxable person, each entity who is registered with the FTA as a juridical person. I'm keeping the example as a juridical person because there is many plus and minus in other scenario. Okay, juridical person, then yes, you can adjust the tax losses for the future taxable income. For the future taxable income, this is called the carry forward to future year. Loss group relief. What is the loss group relief? Which article is dealing for the loss group relief? Which article is dealing? Guys, which article is dealing? I appreciate all the participants who participate in, even you say wrong, but even still you participate, it will give you understanding. Because we all do the mistake and then we will learn on that. If we are afraid, I will say something wrong, so which means you are limiting yourself from the learning. Don't put limitation on you, just whatever you are understanding, just share in that. Okay, so now the group relief, we said Article 38 is dealing on that. I'm just gonna remove this. Okay. This is the same point we already discussed, the 24 loss in 24 adjusted in previous tax period. This is the carry forward. You understand the 2024 losses carry forward to 25, 26. Group losses, company A and company B, you will understand in the group losses, what are that? Article 37, then Article 38. The group definition, we already understand in before starting the topic, what is the group? Okay, the company A and company B, they are meeting the condition, they will be part of the group. So now here, do the tax losses are giving us refund or no? Tax losses will be give us refund or no? Tax losses, no refund. Tax under losses, no corporate tax refund for losses and foreign tax credit relief. Losses also will not give, and the foreign tax credit relief means if you paid the tax in overseas country up to the equivalent amount, you will get the relief. But if you paid more, you cannot claim from the FTA, from the UAE authority, I paid the more tax in the overseas country, you give us a refund. No, they said, okay, you can enjoy the benefit up to the limit that you might entitled to pay in UAE, that is a 9%, you can get relief up to that. If you paid the 10%, 20%, that will be forfeited. It cannot be carried forward also. Under which scenario the city refund will be applicable? Under which scenario will be corporate tax refund? When we paid the excess tax to the authority. Like we need to pay the 1,000, okay, 100,000, let's say 100,000, we have to pay the corporate tax. to the FTA, but while making the online transfer, they put 10 extra. So instead of 100K, you paid the 1 million to the FTA, right? So now in such scenario, subject to verification, FTA may give the refund to you, or he can adjust against the other amount. Withholding tax liability, but which withholding tax? This is foreign withholding tax? No, this is the UE withholding tax. Currently, there is 0% UE withholding tax, but in future, it might be 5%, 10%, or 15% will be in UE. Yes, that refund you may expect from the FTA. Under these two scenario, only the refund will be given to the taxable person. Okay, now continue the same topic, we will understand in the better way. What are which losses will be eligible for the loss relief? Which losses will be eligible for the loss relief? The losses incurred before become taxable person. Anybody want to share example under which scenario maybe this is applicable or will be correct? Losses included, sorry, losses incurred. The word is not included, it will be incurred before become taxable person. But here the definition is that, yes, effective, corporate tax is effective in June 2023, but corporate tax is already effective from 1st June 2023, but you are not registered. Maybe let's take the example of the natural person. As a natural person, you are not registered. So no law relief is available, but as a natural person, because he have the exemption up to 1 million, he is not registered. If he is not registered, so he cannot claim the loss relief also. Let's take the example, Mr. X, 2024, a natural person revenue is less than 1 million, so which means he is meeting the condition of the exemption as a natural person, so he will not registered. If he is not registered, if it is not registered, so then having losses before city registration or claim natural person relief. Of course, he will not register for city while claiming the natural person relief. So no registration because he did not register for the city. He did not pay the city. So whatever the losses coming in this period, he cannot claim in the future also. 2026 city registration is done. No relief is available. No relief is available before registration. Guys, this point is understand. Here's the clarity. I highlighted before become taxable person. Although tax is effective, but you're not registered under applicable exemption, you opt for the exemption. Now, if you are having the losses in the first year where you're not registered, you cannot carry forward. So here the tax advisory or tax optimization. If you already knows your business are in the initial stage or the in certain scenario or due to economic reason, your revenue is less and you are making the losses. You are making the losses, okay? Maybe in 2023 or before the tax period, you having the, I'm giving a very extreme example for understanding, you having the 100 million, the profit, 100 million profit. But after the tax effective in the first tax period, your revenue is less than 1 million. Now is very important point. Very important point. I said your profit is your profit is let's say the 1 million is the profit. I'm saying the profit, not the revenue. And here, of course, if your revenue is 1 million, oh sorry, the profit is 1 million, so revenue may be we can say that 200 million. 1 million is profit, 200 million is the revenue. But due to the certain reason, even the natural person, let's take the example, 200 million. Here we'll take the example of 1 million only. If your revenue is a 200 million and profit is a 1 million before under natural person, but during the after the tax effective 1st June 2023, natural person in the tax period is the Gregorian calendar year, that is Jan to December. Let's say this is the 2024. But in this period, his revenue is less than 1 million. Now, for him, it's good to not register for the city. What is the tax optimization point of view? What is the advisory point of view? What is the consulting point of view? What is the analytic point of view? What is the good for the business? What is the good for the investor? What is the good for the that natural person who running the business? If is it due to any reason, let's say take the example of the COVID. Let's take the example of the COVID. Any economic situation, his revenue is less than 1 million. Is good to go for city or good to go not take the exemption, take the relief? Anybody would like to answer on that? Because if the volume is previously big, okay, so he expecting the losses. So if he not go for city registration and take the claim the natural person relief, so more likely if the revenue is 200 million, so maybe he have the at least 50 million is the loss. 50 million is the loss. 50 million is the loss. But if we are not aware that if we are not aware, he cannot enjoy this 50 million loss in the future year if he claim the natural person relief. So being a professional, these are the point where we are adding the value to the businesses. They are having the advantage. But if we are being a professional, not offering such advices or such support to the business community, of course, they are losing the. Just take the 9% of the 50 million. Just take the 9%. What is the amount? What is the amount? Just calculate and share the amount. What is the 9% of 50 million? Quickly. 4.5 million. So which means if you do not have the appropriate resource on team, or he did not take the proper consultation, or he did not having the proper support from the professional, so he is in loss of the 4.5 million. And the natural person, they having the business more than that also. In the market, the people, natural person, they are doing the business more than that also, because who is the natural person? The sole establishment part of the natural business. Mostly the locals, UAE resident, or UAE national, they are doing the business on the sole establishment. They having the million trillion income. So this is the point here. I given the example for understanding, to understand what are the plus and minus. Okay, now let's the next point. I here effectively manage. I just cross. We will discuss later losses. But here our point is that losses before commencement. What is loss commencement before the city? What does mean? What does mean? Losses incurred before commencement of city. What is the commencement effective date of city? 1st June 2023. If the losses are incurred before this, before first tax period, then that losses you cannot claim, because you cannot claim in the first tax period any loss relief. That losses cannot be carried forward. These losses, why? Because before effective date of the taxation, whatever the losses, you cannot carry forward, because before you earn the income, that is not subject to tax. So now this is the cutoff date. Cutoff date, from this date onward, you may take the benefit of the losses, because after onward you are subject to taxation, you are paying the tax on the taxable income. Before city effective date, 23 losses, 2020 losses, 21 losses. So here we said no loss relief is available. Before, what is the effective date? This is the effective date. Now the next part is, what is the next point? Losses from exempt income. What are the exempt income? What is the definition? If the exempt income, you guys are having the previous topic, the exempt income topic. What are the exempt income? There is certain person like the government entity. There is 7 or 9% that are exempt. Government control entity, or let's say the extracting business. Extracting, what are the extracting? Natural resources, oil and gas, extracting and non-extracting business. These are taxable under the city. There is a qualifying public benefit entities, as per I think Ministerial Decision 37, something like that. So these are the exempt person. What are the exempt person? Maybe by default, by application, or by notification. But as of now, if they are not paying, so they are not subject to tax. So accordingly, if they are having the losses, they cannot have the loss relief for the same. Loss relief. In accounting, we are having the matching concept. That is, it's little different, but just try to consider from that point of view. If we are not paying the tax, so accordingly, we will not get the relief also on that. Do you agree with me on the matching concept? If we apply over here and considering the exempt income, we are not paying the we are not subject to taxation, so accordingly, losses are not subject to loss relief also. Here we have extracting business losses, participating interest, capital losses, PI. Okay. Next is the losses incurred during the SBR time. While learning the small business relief, SBR is small business relief. We discussed this point is also very detailed and with examples. So guys, you understand the SBR. What is the SBR? So we said if your revenue is less than 3 million, you are eligible for the small business relief. But if you just take a similar case, under the natural person relief, you claim, but if you are having the losses, you cannot claim back and carry forward that losses in the future. Same if we are claiming the small business relief, accordingly, we enjoy the small business relief. Even we have the registration return, but no payment, simplified return. Okay. Accordingly, if we offer a small business relief, we are not eligible for the tax losses. Here again, the tax optimization strategy we have to consider. Small business relief is only for the resident only. Juridical person and the natural person. If the losses incurred during small business relief and we are eligible as a juridical person, natural person, we opted. So then from 2024 to 2026, small business relief claim under the net loss position. We claim the loss while the net loss position. So this is the point. Being a professional, we have to do the analysis. if we are falling under the net loss position, we should not claim that SBR, right? Even we are eligible to take that, but considering the losses we can carry forward and adjust against the future taxable income, you might not opt for that. You may not opt. Again, opting is not the, we are saying incorrect, but what is our objective? Being a professional, we have to give the value for money or the optimization strategy. So these are the optimization strategy are the points. 2027 income, but previously losses cannot be adjusted as well as we enjoy the small business relief. If we did not opt for the small business relief, so these losses can be adjusted against the 2027. Here, this just understanding point, net loss position, do not claim small business relief, instead enjoy losses. Hope you guys understand this point. Hope you guys understand this point. Although this point we are covering during the topic while having the relevant topic, but here as the tax losses, we are understanding the same points. Okay, next is the qualifying free zone person. The qualifying free zone person. Under qualifying free zone person, we having the qualifying income and non-qualifying income. These two income we do learn that. Qualifying income, okay, the losses, because the qualifying income were subject to 0% city. We cannot say exempt qualifying free zone, it's subject to 0%. Okay, so now no loss relief. If we are subject to 0%, so we cannot claim any losses under the qualifying free zone person. Now the second part, the here we said qualifying income, here NQI, non-qualifying income or losses. Yes, up to this extent, we said this non-qualifying income will be subject to tax at 9%. Here Article 37 will be applied. What is the Article 37? Taxable person. Article 38 will not apply. Non-qualifying free zone person, both will be applicable. What is the non-qualifying free zone person? What is the non-qualifying? If subject to 9%. By default, if they opt for the 9% standard rated, then both article will be applicable. All right. We said we don't want to go for the 0 rated. We will apply for the 9% due to XY reason. Okay, or you breach the condition or you did not meet the adequate substance of the qualifying free zone due to any reason, due to non-compliance, then you're falling under the non-qualifying free zone. Yes, in that scenario, you may take the Article 37 benefit as a loss and Article 38 the loss also. What is that? Article 37? You can take the benefit, Article 38 also, but 7 condition. What is this? 7 condition we will understand while having the qualifying free zone topic. Not met. If it is not met, okay. If it is not met or elected, you have the option to elect for the standard rated. This is the thing point we understand over here. Guys, up to here, any point or any question you want to ask? I'm trying to cover the most of the point, what I expecting the may come from you or during the previous training or the corporate training, because normally during the corporate training, we are covering such points. So we know this much the question are coming. Today, I covered the one of the previous topic, 1 point. When we come across this point, so I shared with you guys also for your understanding. Let's continue this same topic. Okay, loss relief. Now we will understand the Article 37, then we'll go to Article 38, then we will go Article 39. Okay. So far, what we understand what is the basis, what is the foundation, what are the concepts. So as of now, because if I come directly to Article 37, your understanding will not be refined. You're not able to understand what we are discussing. But having the previous, so far, we spent the time to make the base. If our base is okay, then further learning will be refined and you will absorb the thing in better way and it will be helpful for you guys. This is the, I'm trying to share with you the learning in this point of view. Okay. Now almost time is short, but bear with me to cover the topic. Maybe 30 minutes, 40 minutes will be extra, because now you have the foundation or the base. It is easy to understand. Now, Article 37 is a automatic. So here we're going to understand the same topic from next slide. So just under loss relief, there is another topic, the Article 38, tax group relief. Okay, tax group loss relief. This is the optional. Guys, here you understand. Here we are saying the optional. Here we said the automatic. Automatic, you don't have to make the application. You don't have to opt for election, but this is the automatic and mandatory by force. By force. The other word I'm using, force, by force. This is the automatic and by force. You cannot ignore this. You cannot ignore this. Okay. If you are not applying this, then you are doing the non-compliance. Then you are doing the non-compliance. Okay. So this is the by force. We'll understand in detail in next slide. Okay. Here the Article 38, no election, no application, automatic loss group. Okay. If conditions are met. But this is the optional, but this is not optional. This is the mandatory. If I write here the mandatory, for understanding, it will be appropriate. And the one more thing I just want to ask, if you guys, your colleague or anybody want to join the last couple of session on the guest basis, they can join, but there is no tax training certificate for them. But if they wish to join, they can join. You may share the link with them also. You're getting the link, the same link you can share, they can join. But now we having the topic what's topic, and that they not understand the same way that you are understanding, because you have the previous understanding. We covered the previous topic. Now you will understand much better way. Anyhow, the Article 38, no election, no application, automatic, but optional. But optional. Understand the difference. Here, mandatory, automatic, by force. We have to apply. If we're not applying, we are doing the non-compliance. Now we're going to start the Article 37, and let's dive into detail of the Article 37 and see what are the learning. Here, no election for Article 37, no application, automatic loss. Okay, if conditions are met. If conditions are met. Article 37 carry forward to subsequent year. What is the subsequent year? Next tax period. If we have the loss in current tax period, so we can carry forward. But here is no 10-year limitation. Under interest capping rule, we have the 10-year limitation, but here's lifetime. Here's the lifetime. Okay, so Article 37, automatically and mandatory. Here's the word I already added, the mandatory to apply. See, this is not very easy to summarize in a way. What I'm sharing with you guys, you go and read that article. It's not very easy, easily you understand that. But after having this training, you might go back to the, you must go back, you must go back and learn from the article. Now your understanding will be much easier. You're going to understand what the article is mentioning. I'm not saying this is the 100%. I'm saying you must go to the relevant article and read after this training also, after this class also. But go in the same day or the next day, so you will understand that article word by word, how it will be applied, right? Like you will getting the energy while reading that article. Anybody tried so far reading the articles or the ministerial decision that we are discussing? Would you please share with me, anybody tried this so far? I appreciate if you guys share your experience so far. But guys, I appreciate you go and read that point also and make this notes also. Okay. On the relevant article on ministerial decision, what we are discussing, make the notes on that. This will be your asset. This will be your asset. Having the slide is not the important. Having the understanding of relevant article is important. On that article or the ministerial decision or city law, you put your notes and keep saving. Even the PDF, you can make the comment and save yourself. Okay. If you have the printed, you can write on that. Whatever, that will be your actual learning. Okay, anyhow, let's continue the topic. Here, the current tax period losses can be carried forward to future tax period. Another person word is the same taxable person. Same taxable person is dealing the Article 37. Why I'm emphasizing, you must be careful on that. If you have the tax losses in your first tax period, that you can carry forward in 2025. If still is left, you can carry forward to 2026 and continue for the future till you are allocated, consume your tax losses. But there is some limitation. We will understand the limitation also. The first point, carry forward. The second point, no 10-year rule to the carry forward, unlimited carry forward. 10-year rule is for the 10-year rules for the under interest capping rule. This is our second point. Now, the third point. This is the important point, the 75%. ILR income limitation rule. ILR income limitation rule. This is the abbreviation of the income limitation rule. We can carry forward. There is no limitation. Third, yes, but there is some limitation. What is the limitation? 75% income limitation rule. What is the 75%? What is 75%? Lower of. What is the lower of? Option lower of A and B. A and B. So let's learn that. What is the A and B? Loss amount is 1 million after. Here I'm just giving you the example. Loss amount is 1 million after article adjustment. This is the important part. The 75% of taxable income 900K. The loss amount, let's assume that the loss amount coming from the loss amount at 2024, 1 million. This is our loss. It carried forward to 2025. Guys, you understanding the point? You are with me? If we have the 1 million loss in 2025, that is our first tax period. In 2025, we have the taxable income that is the 1.2 million. If the 1.2 million, so brought forward loss is the 1 million. Brought forward loss is 1 million. So how are we going to apply that? Loss relief lower of A and B. A and B. So how we have to apply that, and then we have to see which one is the lower of. Here our taxable income is 1.2 million. Okay, loss is 1 million. Lower of, we're going to apply, we have to apply the income limitation rule on where taxable income of 2025. Taxable income is 1.2 million multiplied 75%. So this is the 900K. So this is our maximum limit that we can, against that we can use the loss. This is not the actual amount for utilization. This is the cap. This is the cap. If you have the loss up to this limit, you can use that loss. For understanding, we said lower of. Lower of means if we have 1 million loss, so from 1 million, we are eligible only for 900, right? You guys understand how this calculation? If 1.2 million, 75%, 900, okay? So lower of it, loss is the 1 million. Loss is the 1 million and the allowable limit is the 900K. Lower of which one is 1 or the 900? Here one additional point must be there, this calculation. Here is the 1 million. This will be option B. Okay. Option A is 900. We did the calculation. Option B, the loss coming back, brought forward from previous year is 1 million. So lower off is 900. So this 900 we minus from the current year taxable income. That is the 1.2 million minus 900. The balance taxable income is a 300. Right? So this 300 is a taxable here in 2025. Yes. I believe you guys understand, or is still ambiguity, let me know. Still, is there any ambiguity? Please let me know. I'll just I will just try to fix this, but it will be take time also. Okay, I'll do the letter, otherwise it will be. Hope you guys, you understand how this 300 is coming. What is our learning over here? Learning is that option A is 900 and option B is 1 million. This is the 1 million. This is our option B. This is the option A. What is the lower of? What is the lower of? Lower of is 1 million or 900? 900. So 900 means our taxable income for 2025 is 1.2 million minus 900. So taxable income is 300. 300,000. So this is the taxable income. So now this taxable income is zero rated. And how much loss will be carried forward? How much loss will be carried forward? 1 million minus 900. Balance 100,000 will be carried forward to 2026. Yes, guys, appreciate you are continuing the calculation. This is, you will have the much better understanding. Now, the next point, maximum possible extent. Who will use the loss up to maximum possible extent, do not be smart. What is this point? Do not be smart, up to the maximum possible extent. Earlier we were saying, we will do some tax optimization. We will do some saving for the investor or for the client or for the owner or employer. So if we come across and say, okay, here instead of 900, I'll just take the example. If here instead of 900, let me make the here. This is our current scenario. Right. This is the current scenario. I'm just saying option A. A or actual scenario. I'm just making another option B. Here I'm saying as a consultant, as a advisor, as a professional, if we gonna see, okay, we can optimize your tax. How gonna optimize? I'm giving you the understanding, then we will learn that point. Here, what is the, this will be subject to tax. What is the tax rate? Up to 375,000, 0%, and above is 9%, right? Here, if we have 300, which means minus 375, still we left for the 0%. Still, there is a one band for zero rated is available because 300 minus 75,000 still band is available. What we do, so what I mentioned, do not be smart. If I'm very excited and motivated and I'm trying to optimize the tax of the client or the employer, so what I will see, okay, I will not minus the 900 because what they said, this is the limit. Up to this amount you can minus, because the law understanding is not very much refined with everyone. Yes, Arsan, thank you. If we minus 825, so then our answer will be 375. So what we did, the 75% loss we carry forward and it will be adjusted against the next tax period, but we are saving the 9% band under certain scenario. So this is the optimization we might suggest to the client, but what I mentioned, do not be smart. Here we do not have the option to choose this way. Here we do not have the option to choose this way. But this is the mandatory and maximum possible extent. Under the Article 37, they mention this. Here I'm giving you very lighter note, very bullets points for understanding. While reading the article, it may not be very easy understanding. Here we cannot do this. We cannot do this. We cannot choose in this way. Why? They said, if you have the loss up to maximum possible extent, what is the extent? You can adjust loss up to 900. You have to do the 900 only. This one is not allowed. You guys understand? This optimization is not allowed. So this here we're saying, do not be smart. In certain scenario, we'll say be smart, and certain scenario we say do not be smart. Okay. Here we said maximum possible extent, adjust losses against upcoming allowable taxable income as soon as possible without jumping and skipping year or adjusted lower amount. This lower amount we already discussed, right? We said we cannot adjust the lower amount. The second point, I will say, okay, here our income is less than 375,000 is our taxable income. Let's assume that in 2025, our taxable income is a 375. And this 375 is subject to zero rated band. I will not adjust here. What I'll do, I'll take to the next year where our income is 1.5 million. What the authority is saying, what the Article 30 is saying, do not be smart. Do not be smart. Do not skip this. First, you have to minus from here the 100%, whatever the leftover, that you can carry forward here. 100% mean after 75% income limitation rule, after applying the 75%. After ILR, then 100%. This is the second point. These points are taken from the Article 37. You might go and read, but I'm simplifying your understanding purpose. Okay, the next, just to understand the same point that I explained, maximum possible extent, loss is 1 million in 24. The same, the 2025, the income is a 400 into 75% is a 300, right? So now how much loss we gonna adjust? How much loss we can adjust? Guys, please let me know how much loss we can adjust. Yes, up to the full amount after the ILR. So we said do not jump means skipping the year, do not claim as a loss relief, lower amount, do not be smart, and whatever the balance is a carry forward. Yes, please. Any point, any question, let me know. Okay, now the next point is the restricted to the carry forward. What we said, the Article 39, some limitation. What is that? Some limitation on the Article 37. So what is the limitation or restriction? Let's understand that. Still is 37, but along with 37, we have the impact of the 39 also. No change in ownership. We are saying, okay, you can enjoy the tax loss relief, but you have to ensure that the same owners is continue the business, or less than 50% ownership will be changed. No change in ownership. If the 51% ownership is changed, then you cannot enjoy the benefit of the tax loss relief. Why they given this? I'll give you some example for understanding also. Or here we have to meet one condition. One, the ownership will not be changed more than 50%. And second, no change in business nature. What is the change of business nature? Let's say I give you the example. Now I'm doing the consulting business, advisory business, like the accounting, taxation, and other corporate services. If I'm giving these services now, and in the future year, after 2-3 years, okay, I have the losses. In the first 3 years, I decided, okay, the restaurant or the garment, any of the industry having the more profit. So I change the business activity. I will go to the DED and ask, okay, I want to change my license to the new activity. Okay. Yes, there is some possibility you can change the activity and the name also and the ownership also under the same trade license. Yes, if you do that, so what they're saying, previously you are doing the tax consultant. Tax consultant or the auditing, okay. Let's say from 2024 to 2025. The 2 year I done the tax consulting. Then the next 26 to 20, in which what I did, here I have the both its losses. Let's assume is the 1 million losses here. Let's say the 2 million losses here. How much the loss? Yes, Khalil. Yes, Khalil. Yes, you are saying right. Here I have the 3 million loss. What I'm doing, carry forward for the future period. But if you change the SIGA or income generating, just for understanding, one of the participants mentioned, the SIGA, I went to the restaurant or I went to the manufacturing. Then what happened? They said, if you did this, then you cannot enjoy this loss relief. Then you cannot enjoy this loss relief. You will be forfeited. You will be forfeited. First, if you do this, but your ownership is remain same, or there is less than 50% change, 40. Let's say here, I change this, but earlier we are the same owner partners who having this 51% owner, and the 49% is the new partner. is the new partner. In this scenario, we can enjoy the loss relief or not? In this scenario, we can enjoy the loss relief or not? I give you a second scenario. Please let me know now we can enjoy this loss relief or not. See, the first condition, no change in ownership more than 50%. Here, existing owner 51% remains same. If remains same, the business activity is changed, SIGA is changed, doesn't matter. We have this. It's good to go. It's good to go. Right? And if here the existing ownership, if existing ownership is is now the 40%. Plus the 60% is the new owner. So this condition first is met. No, more than 50% change is there. Right? So breach of this condition. Then we came to the second, no change in ownership. Here the SIGA is also changed. This condition is also not met. So we cannot enjoy the losses carry forward. What we said one condition. If this is breach, if this is meeting, yes, we can enjoy. If this is breach, this meeting, yes, we can enjoy. But these conditions will not apply on the listed companies. There is the exception. This condition will not be applied on the listed companies. Keep in mind, the listed companies are not easy to manipulate. Here, there is some calculation or the statistics they have. The people do such arrangement to avoid the tax. Okay. So what they will do, many people maybe in you are the part of the taxation student or the learning. In many regions, we say that they are buying the loss-making companies. In many regions, they are buying the loss-making company. Why are they buying the loss-making? Why they are making? Because they will enjoy the losses against their other businesses where is the profit are there. Because this profit will be coming here and your tax will be reduced. Your tax will be reduced. So this is the one of the thought or one of the understanding, one of the backend, they put this condition. People not should start the loss-making company trading. Okay. This is only whatever the previous losses. From after this change, whatever the losses after the change, yes, that they can carry forward. After the change onward, yes, they can carry forward. But what our discussion is the loss carry forward utilization. That they cannot do that. Guys, this point I understand. So the same point I written over here again, the change in business ownership, no change in first, I said change in business ownership. The second, no change in business ownership, business nature, business ownership, continued loss relief is available. There is no change in the both is good to go. Now change in ownership. If change in ownership, then what we do? Change in ownership not more than 50%. Yes, ownership is changed, but not more than 50%. Then continued loss relief benefit is available. Second, the change, ownership change more than 50%, but check what I'm saying, but check if the ownership is changed more than 50%, but check if the SIGA is remain same or no. No change in the business nature. It's good to go. You can enjoy the loss relief. Right? Continue loss relief benefit. Second, yes, change in the business nature, consulting to restaurant business, then you cannot enjoy. No loss relief benefit is available. This 0.5 is clear, you guys? Okay, now let's do the next point, the remaining losses after Article 37. The remaining losses after Article 37. So here is another point. What we do with the losses? Carry forward to future year, like we applied, we utilize against our own income. Then what is the next option? Or apply Article 38 group relief optional. This is the optional you might do, might not do. All right. First, you have to use against your own income or on your own taxable income. Then you have to think from the group relief purpose also. What is the group relief? What is the group relief? Now, to understand the group relief, so I'm going to give you the one understanding, another understanding. Then we'll continue the same. It's part of the understanding. The group UE loss relief for the branches and the subsidiary. Okay. Here, just understand this concept because this is important. The concept to continue that, then you will understand the our further application of the same article. Example diagram with branches, extension of branches. If the company have the branches, so they are considered are the extension of the branches. If the company have the branches in the UAE, that is called local branches, profit or loss of the branches taken in the city computation. If one company have the multiple branches in different emirates, okay, their profit and losses will be part of city computation. There is what we are saying, the branches are the extension of the original business. They are not the separate taxable person, separate juridical person. Most of us, we are familiar with that. So no election available. Here is no election for the local branches. Foreign branches, profit or losses of the foreign branches, check. Foreign permanent election is made or no. Foreign permanent election, foreign permanent election, exemption election is made or no. Okay. If no, yes, loss relief available for the taxable person, losses and profit worldwide, because on the foreign branches, there is the election if you want to incorporate the foreign branches as part of UE competition or you want to keep the outside UE. This election, you opted, this is a revocable election. It's not irrevocable, this is a revocable election, but there is a certain condition you're meeting. You can opt for the election and you can revoke the election in the future year also. But let's subject to further condition. But here our topics to just for understanding, foreign permanent exemption election is made. No. Yes, it's all the foreign branches worldwide income will be part of UE city. Losses, yes, loss relief is available. What is the available for the foreign tax credit relief? How much? Up to the foreign tax credit relief. Okay. If election is made, then no loss relief is available for the losses and profit, no loss relief available for foreign tax credit. Because once we made the election, we said whatever the income from that foreign branches, it will not be part of the UE taxation. Accordingly, in case of loss, that income also will not be part of the loss, will not be part of UE corporate tax computation. Do you agree with me on that or no? Like with like. the subsidiary. Now here I explain you the concept of the branches. Foreign permanent establishment exemption on election is there. We will discuss in detail that part, but here it's important to understand the branches. Okay, the second part is the subsidiary. UAE subsidiary, give and take loss relief. Yes, it is available. Article 38 is available. We discussed in the morning, today also. If 75% condition is meeting, yes, Article 38 is available. Why? Because 37 against own losses, we already understand. Now we're going to understand the Article 38, how it will be applied. Right? So branches, we already understand the local branch is part of that. There is no election, but foreign branches, yes, there is election option. If we opt for the election, then it will not be part of that. And if not opt for election, it will be a part of that. But this election, either we make for all the branches or none of that. But there's a further condition also that. Anyhow, subsidy, yes, the Article 38 is available for the group relief. Today, starting this session, I explained this part. Overseas, outside country, give and take losses, yes, not available. Even 75% condition are meeting. Outside company, the loss relief are not available. Why? They are meeting the condition of the PI. They are meeting the condition of the participating interest. In the morning, we revised the topic, the participating interest. If their income is not coming to the taxable, okay, so they are meeting the condition of the PI and the income is exempt, their losses will not become to the UACT for the relief also. Guys, so far you understand the concept up to this? Do you have any question on this? Okay, Article 37, we already automatic and we already covered so far Article 37. Now Article 38, we're going to cover the Article 38. Article 38, we already having the concept. It will not take much more time. So just stay with me. Article 38. Optional relief, no election, no application, automatic group if meet the condition, automatic loss group if is meeting the condition. Resident juridical person will be eligible to offer the tax loss group under Article 37. Resident juridical person, so now just here for understanding purpose, the company P and subsidiary S. Why? The PI, this S is a PI, participating interest. But participating interest, we said the 5%. The subsidiary, if we are saying more than 50%. So for here, what is the criteria? For 75%. Anyhow, P, if we having the 80% shareholding in the S, and again P have the shareholding another subsidiary SS, we can give another name or S1 or S2. He have 80% here, he have 90% here. So if we have 90% over here, and if this company own 100% of this company, both way, from let's say here 90 up to here. So this company have the 100. So this is the more than 75. If it's 75, it will be part of the group relief. It will be part of the group relief. But here's another point that we'll understand later on. He said this company, the parent company, he can make the consider will be over here. Consider over here will be loss group if here the initial part is more than 75%. More than 75%. Why? let's okay, that we'll discuss. I'll not make the complicate. That we'll discuss once we come on that point. Here 90% and this company own 100%. This will be group. Now come from this point. This P is here 80% is more than 75%, and this S company on this company is 100%. So this will be group. So now what is the point? These are all are the group release company. Let's see in mode point 2 for the article 37. Point 1, hope you understand, juridical person, resident juridical person, right? The second, that also we covered already, 75%. Direct holding and indirect holding is a 75%. Okay, the P company own the 80% share in S company. 80%. Right? Now this S company, this S company own here the 80%. Just let me know. Now this company and this company can make the group or no? They are meeting the condition of 75% or no? Just let me know. This P company, they can make the group with here or no? P to S, yes. Okay. But no, P to S in direct shareholding is meeting the criteria? No. Why? 80 into 80 is a 64, is a less than 75%. Right? Now, how about this P is making here 80%. Now this company have here the 80%. Again, it will not be made. Again, it will not be made because less than 75%. Which loss group? Which loss group? Now we're saying, what is the which loss group? Income will be adjusted against which loss group? Right? This is the point. How you will adjust the loss? The first point, the current year loss. Current year loss, then opening losses. Must be used against the own income first, then carry forward to group. Here the loss group, let's say you have the loss. Here the current year income. If let's say if you have the in 2020, let me take the covers. Let's assume that 2025. Here I'll just take the example 2024. Here we have 1 million loss. Let's assume that. Here we have the 500,000, the taxable income. Sorry, taxable income. If we have 500,000 taxable income, so what they're saying? This loss coming here subject to 75% income limitation rule. What is the percentage? Guys, quickly, what is the percentage? Sorry, what is the amount? What is the amount? 325,000, something like that, or 375,000. Apply 500,000 into 75%. Yes, 375. So from this 1 million, how much loss will be adjusted over here? First, we will adjust 375% here. So then how much will be balance? From 1 million, we are adjusting here to 625. Right? From this loss, 375 is we transferred over here. So it is 0 against 25. But now, this is the article 37 we dealt. But here the balance is 625K. So now we can apply the article 38. Like, let's assume there is a company, this company is A, and there is another group company is meeting all the condition. So now he's saying article 38, this is article 37, we applied against same taxable person. This article 38 is meeting the condition. After using against own income, then you can transfer the loss to the tax group. You understand, but here is another exception. If this loss is before the tax grouping, anyhow, that I'll not add over here, later on we'll discuss. Let's assuming that they are part of the same ownership since from the beginning, 75%, assuming that same 75%. First, he utilized against 25 own income, then he give the same 25 to the group member. How much that available, whatever the income, he will transfer to there. If no, first let's say assume that he utilized the 400 loss over here. Okay, so then 225 is left to the carry forward for the future year. First use article 37 against own, and then you have the option for article 38, and you can give loss to your tax loss group also. Hope this point is understand. The full amount subject to here, again the same thing. Again, we have to see what are the income limitation is available. Whatever the income is available, same we will see the 75% from the group members, whatever the available up to that extent. If the income is 1 million, yes, full loss will be given to them. It will be 0. But if their income is up to 400 after the ILR, it will be 0. So balance 225 will be carried forward to 2026. Right? Now you understand the article 37 and then article 38, how to adjust the loss. Any question? Which loss group? Opening, okay, this we already got. Must be adjusted against own income. Must be adjusted against own income. Then to the, this we understand with the example own income, then the balance loss can give to the group member. And if still loss is left, you can carry forward for the future. Any amount can be given to the gross member. Yes. Here, yes, the one of the participant asked, yeah, Irtada Bukhari has full amount can be transferred. Yes, you can transfer full amount, but here is the optional. You might transfer the full amount or might transfer the partial amount. Here you can be smart. Okay, any amount can be given to the group member under loss group. Here we can act as a smart. Here we can choose the lower amount. Here we can be given our tax optimization strategy, lower amount as a tax optimization. Lower amount as a tax optimization. If you do analysis, if you feel something is better, you can opt. Here can act as a smart. You may, because this is optional. Article 30 is optional. You might give full amount, might give partial amount, or might do not give or skip the year also. Hope this point is clear. ILR will apply maximum loss relief of some loss amount or 75% of the income to receive loss. That we already understand. Example, receiving a taxable income, 1 million, company B income is 1.2 million, up to 800 we can, give the loss. But here we said we can be smart, so we wish to utilize the 375% full band. We give the 825 amount, lower amount. Single loss can be split, divided, given to multiple companies. Yes, if you are part of the multiple group companies, you can see the tax optimization. If that loss of that company is falling to the zero rated band, so you can adjust the amount and give that much amount to that company, and balance you can give to another company, or you might not give, skip year. Yes, you can be smart and you can split in multiple way. Separate taxable person. Here, the important part is that all the companies must be a separate taxable person. Even the company is meeting the 95% group condition, but it should not be part of the tax group. If it is a part of the tax group, then you cannot that. But as a group, you can treat them. But as a group, you can treat all the company as a single person. Not the tax group members. Inside group, there is a 3 company. All 3 companies will be one taxable person. If you are meeting the condition 95%, but you did not meet the tax, but you did not apply for the tax group, yes, it's good to go. You can share. You can give the loss relief. Okay, guys, let's park over here, and we will continue in the next topic from the next session. Here will be our practice session with the examples. But today we covered the base foundation, but I appreciate before coming to the next session, you just refresh this. It's important while doing the practice. If you guys have any question, just let me know.